Hello, welcome today. My name is Justin Lake from Think Numbers. So this is the question that we're going to get in our exam today. Total expenses incurred by Patrick Birch Proprietary Limited for the year ended 30th of June 2017 was $750,000. This amount includes a depreciation expense of $160,000. The following information was summarised from the financial statements of Patrick Birch Proprietary Limited. Total prepaid expenses for 30th of June 2016 were $460,000. Total prepaid expenses for 30th of June 2017 were $480,000. Total expenses payable for 30th of June 2016 were $260,000, and total expenses payable for 30th of June 2017 were $220,000. What were the cash payments for expenses paid by Patrick Birch Proprietary Limited for the year ended 30th of June 2017? Alright, so how would you actually approach this question? Well, the way to actually answer this is to look for some keywords. So within the actual question itself, they're actually asking you around what were the cash payments for the expenses paid by Patrick Birch for the year ended 30th of June 2017. Whenever you get a question like this, there are a couple of elements you need to look for, and it should be sparking immediately to be using a formula used in the indirect method. And so what this actually formula is to work out an operating cash flow using the indirect method. You start with your net income, add back your non-cash expenses, add back any non-operating losses, minus the non-operating gains, and then if you have a decrease in your current assets, you add it back. If you have an increase in your current assets, you deduct it. If you have an increase in your current liabilities, you add it back. And if you have a decrease in your current liabilities, you decrease it. And that's how you work out your net cash flows from operating activities. Now, because we're trying to actually work out a kind of operational payment here using cash payments, what we can actually do is actually use this formula to get the answer. Now, we may not have net income. However, a component of net income are expenses. So I would start with the expenses of the business, 750K. And this is as a negative because it decreases profit. And then what you do is you need to add back any non-cash expenses. So in this case, the question says that there's a depreciation expense of $160,000. So I would actually add that back. Because the reason is we want to actually gross up the expense position to add back any non-cash items. So that's what we're doing. There's no indication in this question of any operating losses, which results when you got a loss on sale of non-current assets, and there's no indication of any gains, so we don't need to do anything there. Now what we need to do is we need to look at the movement now of these different accounts here. Now prepaid expenses is actually considered a current asset, and if we look at the actual movement, it's actually gone up by $20,000. So if we look at the formula, if we actually have an increase in current assets, we need to deduct it. Alright, so we've got a $20,000 increase. So what we're going to do is we've got an increase, so therefore we're going to deduct it. And then the second item in expenses payable is actually considered a current liability. And in which case we're actually going to be looking at the movement from the last year's period to the current year's period. So that's actually a decrease of $40,000. And so when we have a decrease in current liabilities, we deduct it. So we're going to deduct that. And then we're actually going to be able to get our answer. And the answer is actually $650K. And so as a negative, because this is actually a cash outflow, remember. These are actually the cash payments for expenses paid by Patrick Birch. So we've actually paid $650,000. Okay, so what you're actually doing is you're taking the expense, you're actually adding back any non-cash items, and then you're taking the movement in balance sheet. And the reason is because cash and non-cash items actually go through the balance sheet. And so what you're actually doing is by taking the movement and the expenses, those are the two components that are not the cash. And the only difference to actually make this balance is the cash component. And look, the other thing to think about is the actual expenses are actually driven by primarily cash payments for expenses, but they also are driven by the prepayment account that sits as a current asset, and they're also driven by expenses payable, because we accrue expenses when they've been incurred but they haven't yet been paid. And so when we actually have used up some of the prepaid asset, that's actually going to go into expense, and when we actually use up and pay the expenses payable, so we actually pay the, say, employee expense, for example, that's also going to be going into the expenses. So that is why you would be using those two separate accounts in combination to work out the total cash payments, not just that particular account or not just that particular account. All right, guys, I hope you've enjoyed this lecture, and please don't forget to subscribe below.